Today's schedule. This doesn't say live. Doesn't say live. Right, we are live apparently. Hi, my name is Bridget Jackson, divorce coach at Equalexis. Today we are doing a live webinar all about insurances. So how to protect your business, health, income and lifestyle post separation or divorce. Stuart, I'd like to introduce you.
Yeah.
How are you today?
Great, thank you.
Stuart Emery. Now, Stuart, I was just reading something about you saying that you're upfront, perceptive and straight talking. Tell me more.
Well, I think we have the philosophy that it's about getting the right job done, and people with not any too much waffle, I suppose. So getting to the point, getting the solution in place.
Great. Okay. And your background is that you're a financial advisor, and you've had 10 years experience.
No, I've been in the business 25 years.
Oh, 25 years. So I must have, read something that was from some time ago. And so you have a team, don't you? You have a team that work with you in terms of this area as well.
Yeah, IMEC Advice is a Parnell-based operation, but we have clients all across the country. There's 12 in the team, a mixture of admin and advisors. We're very agile, I suppose, when it comes to things like a lot of the young guys are really good at, young people are really good at using Zoom and sharing that sort of stuff. Yeah, they're very good at that. So we talk to clients all around the country all the time.
Fantastic. Okay. So let's talk about what are the risks of not having proper insurance coverage after a separation or divorce? I'm sure there's many.
Well, there's many, but I think the major risk is there's been, it's lost, incomes changed, incomes move around. It's about family security. It's about paying debt down in certain situations, and also just making sure the family unit can function as well as it can in the event of the worst happening, like a death or a disability. And especially disability, I suppose, is much more important at some level because it's much more real. It's living.
Yeah. Are you finding, particularly over the last few years with COVID and all the stress that people are going through, we are in a recession at this stage? I know that's debatable, but there's a huge amount of pressure on people in relation to, their workplace. Obviously at home, we're seeing a lot of people, the numbers in terms of separation now are getting up to about 60%. Have you seen claims increase over the last few years in terms of your business?
Think, yes. COVID's definitely had a huge effect on mental health, but I think that's rolled back into physical health as well. We're seeing a lot of like cancers, like around bowel cancers and that sort of stuff. People are kind of really stressed about bits and pieces. Mental health has obviously become a real big issue. Some people like sitting at home, but some people don't. So I personally struggled. I personally really enjoyed the first lockdown because it just was nice and quiet. But then you start to lose, seeing your workmates or your friends, and that creates mental issues as well, and lots of stress for people, and financial stress as well.
In terms of if someone's got an existing insurance policy and they're now getting separated or are separated, how would you change it? How would you modify it for them to better fit, their new beginnings or their new situation?
Right, because we're an unaligned advisory, so we don't particularly deal with any insurance company. We deal with the whole market. So what we would do, I would walk in. We kind of start with a blank piece of paper, and just go, "Hey, you've had some existing cover. Let's see what actually is the best fit for your new situation at this point." And if that's the old situation, the old cover or the new cover, we'll make it work. It's not necessarily about just going right in new business just to get paid more commissions or anything. It's about making sure the right cover's in place for you. And a lot of times you'll have situations where there's more debt, there's less debt. What their responsibilities have changed. There may be new jobs as well. So it's just making sure they all fit.
So I work with a lot of clients. We work with a lot of clients, obviously going through this process, and we talk a lot about insurances. And we do tend to get quite a common response is, "I'm just going to cancel it all." So from your perspective, what would you say to clients in terms of that they're just saying, like, in the financial times as they are at the moment, I'm just going to cancel everything, or cancel some of it?
Well, I think, hey, a lot of that's a knee-jerk reaction to the situation they're in, and probably around cost and bits and pieces. But it's like, let's get the right advice and talk to you through it. Like, there may be a situation where you can, in some cases, we can get suspension of income for 6 months, that sort of thing. So if they're going for a bad situation, we can say, let's keep the cover in place, and you may not be particularly covered for everything, but at least if you've got a new medical event, the cover would still be sitting there in the background, and we can pick back up again. So there's options around, especially out of COVID. A lot of insurance companies are now much more empathetic to financial situations.
Yeah. So health insurance is really important. Stuart and I were having a bit of chat before we got on this webinar, and Stuart maintained, and I asked him the question about, is he getting more claims, and what seems to be getting higher and higher in terms of claims. And it's cancer. That's the number one killer of people in New Zealand, isn't it, Stuart?
Yes, it is, yeah. And around medical insurance is interesting. I think I'm the view of that. If you have a medical insurance, you never change it, because the nuances are so small. Like, you might have had a broken finger 10 years ago, and an insurance company will exclude it. So you just got it with medical insurance. The burden of proof is so much higher than it is for like a life insurance policy, or because the payments are so much more regular.
Yeah. So what's the ideal age to get medical health insurance? Is it when you're a child? Obviously, a lot of families have their children on their policies or have their own policy, etc. When's the ideal age, do you think, to actually get health insurance?
Well, I think if you've had it as a child, you want to keep it going, because that's when most likely not to have had any pre-existing conditions. But also, like for me personally, my ex-wife actually had a corporate scheme which had all pre-existing conditions taken on. So I took that over and I kept that. So it's important. We work with people all the time and say, if you've got employee benefits, what bits would you keep? What can we transfer some of the previous family's employee benefits over to the people, someone that's splitting up.
Yeah.
So
I know. Yeah. So I know from my own perspective, my daughter had a heart transplant unplanned at 13, and she ended up getting a payout of $50,000 in terms of that. So, and it also comes up a lot with clients in terms of children, who's going to in terms of their health insurance when they separate. So that's a big issue for our clients. So what are some of the key factors that people need to consider when they're thinking about altering or changing, or as you just said, don't change it, when choosing a medical health plan?
Well, I think medical health plans, there is a variety of different options of excesses you can use, and there's multiple types of covers as well. There's you can go from the Southern Cross Ultra Care, which covers everything, but it's really expensive, or you can bring it back to like a Southern Cross or NIB Wellbeing too, which is just major surgery and specialists and tests, which is much more affordable. And even all insurers, even Southern Cross now has excess options. So like, you might say, well, I'm going to reduce my premium from $700 a month to $500 a month, but I'm going to have $500 excess if it's a surgery, not if it's a diagnostic procedure. So it's understanding how those excesses work and what's the best way to tailor your program for yourself.
Yeah, absolutely. So income is pertinent, isn't it? We all need to survive. We all need to have an income to be able to survive and pay the bills, which, as we all know, are getting more expensive. So how can people ensure that their income is protected in the event of separating?
Well, I think a lot of times when it's a separation, the whole employment income paradigm changes, right? So some people haven't worked before, now have to go to back work. There's people who have worked a lot are working less, or vice versa. So it's understand, or being self-employed, going back to employment. So all those things change how an income protection policy is structured, and it's important to get that right. if you're a self-employed business person, we need to understand what the cash flow is and how long you've been in business for, so we can get what they call an agreed value contract, so it's locked in, which I think is important to get in these times, to get a contract which is an income protection policy that you know will perform at claim time, because otherwise, well, you have something. So that's important to us, to make sure we sit down and we look to review our clients at least every year, but maybe it ends up being 2 years, to review their financial situation based on their income from their companies or their salaries, and just understanding how that works.
So obviously, top of everyone's minds who are going through the separation process is, how can I protect my assets and property with insurance now that the situation's changed?
Yeah, and again, I suppose it's such a bespoke sort of conversation, because everyone's completely different. And yeah, the fundamental factors are all pretty well the same. We have a mortgage house, we've got family, and all those things, but everyone's situation is different. And I think it's important that we sit down with a person and just sit down. It doesn't take a lot of time, maybe half an hour, and just understand the situation. And then we go away and tailor a plan for them that suits their situation, their family situation, how much income they've got, disposable cash, all those things. Because also you got to rock in things like, you need to make sure you've got your KiwiSaver for your retirement. So, and a lot of the insurers now have, as part of their programs for the income protection policies, have, they'll pay you your income, so you've got your income, a personal income, but they also pay for your KiwiSaver to be paid as well. So there's a lot of different things that most people don't understand about insurance companies.
Yeah. So we see a lot of clients who have got family businesses.
Yeah.
Probably at least sort of 65% of the clients we see have family businesses. So how do they assess their insurance needs for their business after they've gone their separate ways?
Well, I think it's first of all, as you would know, during this split up process, it's an emotional split up, but also it's a financial split at some level, right? So the question would be, who was the ownership of the company? Was there a split ownership? Did one of the partners have to buy the other one out? And that creates a bit of create cash flow problems as well. So we look at how that works, and then we look at, like, I've got a situation at the moment, not unlike your daughter, where her son had a situation of a cancer and got paid some money, and then there's a bit of a fight out who gets to use their money with which part. So it's actually having a clear understanding. When we do insurance policies, we make sure that the ownership's correct, and that the right money ends at the right place at the right time. Because you don't want a fight. There's money on the table and everyone's fighting over it. When it's a sick child or something. So it's important we get those completely right. Yeah.
In our situation, we actually ended up giving it to our daughter to make the decision in terms of what she wanted to do with it. So what would be 3 top tips that you want to give our viewers who are going through this process and are in a bit of a quandary about their insurances moving forward?
Well, I think the first thing is just sit down with someone, either us, one of our team, or someone else who's I can't use the word independent, but has a unaligned view of the whole thing, and just can take an overview of what your existing cover, what the new cover, and give you some pragmatic advice. Because a lot of people just go get the insurance policies, throw them in the back in the bottom drawer, and it's not fit for purpose. And I think it's really important to have something that's fit for purpose. And I know it sounds a bit, I'm going on, but making sure it works at claim time, because a lot of them don't. You might have an insurance policy that insures you for $300,000 of income, but you might only have $100,000 of income, and that's just wasted premium, because you're not getting that back. So it's just making sure your situation, fits what you've got. Yeah, absolutely.
Well, thank you, Stuart, for joining us today. It's been really useful. On the screen is Stuart's contact details. Stuart's one of our expert advisors, so it's also available on our website, Stuart and his team's details. Now, I just want to leave you with something that's written on your website, Stuart, which I really love, actually, and it says, if you want an enthusiastic, caring, first-class service, then talk to you, Stuart.
Thanks a lot.
Thanks for joining us. Thanks, everybody.
See ya. Bye.
Bye.